Now let us start the second question. 2A. Asma Rani Public Charitable Trust runs a hospital cum rehabilitation center. So it's running what? A hospital cum rehabilitation center to treat patients suffering from leprosy. The trust is registered under 12AA and following cash system of accounting. Now trust is following cash system of accounting. This is an important point. Furnishes the following information. First is what? Gross receipts from hospital is rupees 560 lakhs. It exceeds 1 crore. Gross receipts from rehabilitation center 220 lakhs. Fees not realized from the patients as on 31/3/20. Now remember, as this trust is carrying on, say, following cash system of accounting, trust follows what? Trust follows cash system of accounting. The trust is following cash system of accounting, hence unrealized fees. Unrealized fees will not be regarded as income during this year. Okay. Then we have administrative expenses paid for hospital. This will be regarded as application. Administrative expenses paid for rehabilitation center, it will be regarded as an application. Now, acquired a building of 150 lakhs on 1/5/19 for expansion of rehabilitation center. Cost of land included there is 85 lakhs. Stamp duty value of land and building as on the date of registration was 185 lakhs. Now here, immovable property has been acquired. Immovable property is acquired for inadequate consideration. So immovable property is acquired for inadequate consideration. Provisions of 56(2)(10) gets attracted when the difference between the stamp duty value and the consideration exceeds 5% of the consideration, or say 50,000, which is say higher. But in case of charitable trust, which is registered under 12AA, if they acquire immovable property, registered under 12AA, if they acquire immovable property, provisions of 56(2)(10) will not get attracted. So 56(2)(10) will not get attracted. Hence, purchase of immovable property for inadequate consideration, taxability will not arise under 56(2)(10). Then grant received from state government, we presume that they are revenue in nature and same will be regarded as income. Then we have administrative expenses includes payment of 12 lakhs to resident doctors and contractors on which tax is required to be deducted under 192 or 194C. But such tax has not been deducted at source. So as we are aware of the fact that 30% of the said expenditure, now it will be applicable for trust also, 40A1A. 40A1A applies for trust, and 30% of such expenditure, that is 30% of 12 lakh rupees, will not be regarded as what? The application of income. Then voluntary contributions including corpus donations, 10 lakhs is rupees 20 lakhs. Now we are having 10 lakhs voluntary contribution in form of corpus and 10 lakhs other voluntary contributions. And these contributions are including the gross receipts of hospital. So if this voluntary contribution, it will be exempt under section 11(1)(d), this 10 lakh rupees. And other voluntary contribution will be regarded as application, will be regarded as income. Anonymous donations, as you are aware of the fact, they are taxable under section 115 BBC. If you receive any anonymous donations in excess of 5% of the total donations, or 1 lakh rupees, which I say higher, that will not be taxable under 115 BBC, and over and above the same will be taxable under section 115 BBC. Then amount donated to Jan Kalyan Trust, registered under 12AA for running similar hospital in Bihar, includes corpus donations of 5 lakh from hospital receipts. This is 11 lakhs. Now, out of 11 lakh, 5 lakh will not be regarded as what? 5 lakh will not be regarded as application amendment was made last year. If you donate in form of corpus donations to another trust, won't be regarded as application. Repayment of loan taken for earlier construction will be regarded as application. Then trust has set apart 25 lakhs for acquiring another table and equipment for OT, that is Operation Theatre, but was spent in October 2020. Form 10 was filed and AO was duly informed as required under 11.2. So we can keep the investments under section 11, say we have to accumulation of more than say 15% if you want to accumulate, the same can be done as per the provisions of 11.2. But they are to be invested where? Under section 11.5 modes. They are to be invested under section 11.5 modes. So here only, 15 lakhs has been invested in 11.5 modes. So 15 lakhs will be entitled for the benefit of the exemption. They are asking you to compute the total income of trust and its IT liability for the assessment year 2021. So here we are required to compute what? Computation of total income. Total income of Asma Rani. It is what? Asma Rani. Asma Rani. Asma Rani Charitable Trust and tax liability. Okay. First one is what? Gross receipts from hospitals. Gross receipts from hospitals. It is 560 lakhs less, voluntary contributions will be separately taxing. They have said that they have received voluntary contribution of 20 lakhs, which are included in gross receipts, less voluntary contributions. That is 20 lakhs. It works out to be 5 crore 40 lakhs. Okay. Here we treat the voluntary contributions. Voluntary contributions being corpus donations. Being corpus donations. Voluntary contributions being corpus donations. Exempt. Other voluntary contributions. ₹10 lakh. Okay. So this was about this. Then gross receipts from rehabilitation center. Nothing about rehabilitation center has been provided. Gross receipts from rehabilitation center. Gross receipts from rehabilitation center. Okay. 220 lakhs. 2 crore 20 lakhs. Then we have, next is fees not realized from patients. Fees not realized from patients. That is, since the trust is following cash system of accounting, same will not be taxable. in the current financial year, as it has not been, as same is not received. Okay, so it won't be taxable in the current financial year because it is not received. Therefore, then we see the other, other incomes first. Grant received from state government. Grant received from state government. We presume that it is revenue in nature. It is revenue in nature. We can also presume that a capital in nature, then it won't be taxable. There is 7.750,000. Then we have other receipts, say voluntary contributions we already dealt, anonymous donations received. Now look about the taxability of anonymous donations. Anonymous donations, 8 lakhs. Less, we have 5% of total donations or rupees 1 lakh, whichever is more. So we have how much total donations? See, they are saying they are receiving voluntary contributions 20 lakhs. 5% of 20 plus 8 lakhs is the anonymous. So 5% of 28 lakhs, rupees 28 lakhs, or 1 lakh, which is more, or 1 lakh, which is more. So 28 lakhs, 5% works out to be 1,40,000. So here anonymous donations, it won't be taxable under 115 BBC, will be 140. Anonymous donations taxable will be 8 lakhs minus 140. So it will be 6,60,000. 6,60,000. This will be also income. 140 is also income. Now we are saying that this is the anonymous donations, and we'll be getting the benefit of 15% set apart for future applications. Anonymous donations not taxable under section 115 BBC, that is 1,40,000. That is 1,40,000. So this was about the anonymous donations. Then next is, here about the income part we were discussing, and we can write the purchase of immovable property for inadequate consideration. Now, in case if we purchase immovable property for inadequate consideration, 56(2)(10) will not get attracted when immovable property is received by charitable trust. Okay. And what is next is income part we are discussing here. Gross receipts we have considered, gross receipts from rehabilitation center we have considered, fees not realized from patients we have seen, and grant received has been considered, immovable property aspect has been considered, anonymous donations we have seen. Then other is what? These are what different ones, these where. Now we see here we can, what is now the total? It is 5 crore 40 lakhs plus 10 lakhs, 550 plus 220, 770 plus 7,50,000 plus 1,40,000. Okay. So it is 7 crore 78 lakh 90,000 less 15% set apart for future application. We can keep what 15% is set apart for future application. That is 1 crore 16 lakh 83,500. Remaining works out to be 6 crore 62 lakhs 6,500. Now less. Now look to the expenses aspects. First one is administrative expenses for hospitals. Administrative expenses for hospitals. Administrative expenses for hospitals. How much administrative expenses has been there? Administrative expenses is, 335 lakhs. 3 crore 35 lakhs. They are the administrative expenses. In relation to the administrative expenses, they have said that administrative expenses includes payment of 12 lakhs to resident doctors. So here won't be regarded as application. Payment to resident doctors or contractors where tax has not been deducted at source. Deducted at source. So here 30% will not be regarded as application. 30% of, 30% of 12 lakhs. It won't be regarded as application, 3 lakh and 60,000. Remaining 840 will be regarded as application, which is already included in the administrative expense. Then further they say that amount donated to this running a similar hospital includes corpus donations, 11 lakh, that is separate. Repayment is separate. This 25 is separate. Only relating to this. Then administrative expenses of rehabilitation center. So this amount is how much? 3 crore 35 lakhs. Minus 3 lakh 60,000. That works out to be 3 crore 31 lakh 40,000. Then less administrative expenses of rehab center. How much administrative expense of rehab center is there? 1 crore 38 lakhs. Then we have this we have considered, this we have considered. Then purchase of immovable property, purchase of capital asset will be regarded as application. 1 lakh 50,000. 1 lakh 50,000. Depreciation won't be deductible. We are treating the same as application. This has been considered. This has been considered. Then voluntary contributions, this much. Voluntary contributions we have already seen. Anonymous donations we have already discussed. Amount donated to Jan Kalyan Trust. Amount donated to Jan Kalyan Trust other than corpus donations, because we have already told you corpus donations to other trust will not be regarded as application. 5 lakh rupees is this. So 6 lakh will be regarded as the application. That is 11 lakhs minus 5 lakhs. Okay. Then repayment of loan taken for construction of rehabilitation center. This will be regarded as application. Repayment of loan for rehab center. How much it is? 6,65,000. How much it is? 6,65,000. 6,65,000. Then we have, application, accumulation under section 11(2), capped under section 11(5) modes. That will be application. How much it is? 15 lakhs. So we have considered each and every point now, from the very beginning: gross receipts from hospital, gross receipts from rehabilitation center, fees not realized from patients, administrative expenses paid for rehabilitation, acquisition of building, which is regarded as application, grant received, administrative expenses, disallowance we have considered 30%, then voluntary contributions, okay, anonymous donations, taxability we have considered, donation to other charitable trust we have considered, repayment of loan, and this. So this gives you what? Our income. Then we'll be adding that also. The anonymous donations which are taxable under 115 BBC. It is 6,62,000. 6,62,06,500. 6,62,06,500 minus 33140 minus 138 minus 150, 1 crore 50 lakhs. One crore and 50 lakhs. Minus 6 lakhs minus 6,65,000 and minus 15 lakhs. So it comes out to be 15 lakhs 1,500. Once again we can verify the same. And anonymous donations, add anonymous donations taxable under section 115 BBC. So that works out to be 6,60,000. So this is the total income. You can calculate it. Total income works out to be 21,61,500. Now calculation of tax liability. Calculation of tax liability. Here on 6,60,000 anonymous donations of 660. The same will be chargeable to tax at rate of 30%. So 660 into 30% is 1,98,000. Balance income at slab rate. Now what is the balance income? 15,01,500. 15,01,500. So on 250 it is nil. Next 250 it is 5%. That is 12,500. Next 5 lakh it is 20%. That is 1 lakh. And on balance, what is the balance here? 5,01,500, it's 30%. 501,500 into 30%. That is 15,000. 1,50,000 40, 450. So it is 150,450 plus 112,500 plus 198. 4,60,000, 950. This is total tax. Add HEC at rate of 4%. 18438, 479, 390. It is the total tax including HEC. This is what the total tax including HEC. So calculation you can once verify. This way you have to do the question. This was trust question. This has also been asked in our revisionary, this test series. You can go through the same in our test paper discussion. Videos have already been uploaded. This type, same type of question was asked by us in our test series.